Hello everyone, welcome to the channel of Qianmo. In this video, we will talk about how to reconcile ATO accounts for a year-end financial report. You must be thinking, what are ATO accounts and why is it important? ATO is Australian Taxation Office. As you can imagine, any working individuals and businesses would expect to have obligations to lodge tax with the ATO. So the ATO maintains accounts for different types of taxes to record the indebtedness to or from the Australian Taxation Office by a taxpayer. Among all the types, two most common ones are the ATO income tax account and the ATO integrated client account. Income tax account, as per the name suggests, is a tax account kept by the ATO to record the income tax liabilities and payments by a taxpayer. Integrated client account is an ATO account for GST, pay-as-you-go withholding, and pay-as-you-go installments. Both accounts compound interest if relevant taxes are paid late. It is called general interest charge. It is the interest that the ATO imposes for late tax payments. It applies to most taxes, include income tax, fringe benefit tax, GST, and pay-as-you-go. The GIC rates are updated quarterly. It can go as high as almost 15%. The lowest time is during the historical 2020, which is just over 7%. Where do we find the details of those accounts? Normally, the ATO would post the account statements regularly to the taxpayers. But acting as tax agent, we have the access to the ATO designed information platform called the ATO portal. We can download the account statements from there. Similar with other topics, since there are continuous transactions with the ATO, the information presented by those two accounts need to be reflected on the financial reports. Let's start with the income tax account. We can in some ways understand this account statement like a bank statement to a bank. As we know, on a balance sheet, debit is the increase of asset and credit is the increase of liability. Here is an example of income tax account. We need to rate the ATO accounts in the ATO's eyes. Debit is what the taxpayer owes them, and credit is what the ATO owes to the taxpayer. So this line here means that the ATO processed the taxpayer's lodgement for the year ended 30th June 2016, and it owes to the taxpayer $4,643. You must be thinking, aren't we supposed to be paying tax? Why is the ATO so nice and give us money back? Okay, if you've watched the third video about the business activity statements, you must know that the ATO normally collects income tax on installments over the year in the forms of pay-as-you-go withholding or pay-as-you-go installments. So when in the year end, the exact income tax calculation is performed, it is turned out that the ATO has collected more tax than it should be. So in this case, they will return the extra amount back to the taxpayer, which is what they did a week after they processed the lodgement, showing on the income tax account statement as EFT refund for income tax, $4,655, and it is on the debit side, as it is reducing the ATO's liability from the ATO's perspective. We also need to note that this includes $12 interest paid by the ATO on overpayments for the income tax during the year. Now, how does it reflect in a business account? Let's say the 2016 financial year compliance work is completed for the ABC Pty Limited in November 2016. The tax liability for the year ended 30th June 2016 is $20,000. However, 4 income tax installments have been paid. $6,160 was paid each quarter. Now the income tax payable account on the balance sheet of the ABC Pty Limited for the year ended 30th June 2016 will be like this. 3 debits of $6,160 reflecting the fact that 3 tax installments were paid for the first 3 quarters, and the June quarter is not recorded because it was paid after 30th June 2016. Now at the year end, the tax calculation showed that the income tax liability is $20,000. So we debit the income tax expense account and credit the $20,000 to the income tax liability account. Now the balance of the income tax liability as at 30th June 2016 is $1,517, reflecting the fact that as at 30th June 2016, the company owes ATO this amount. So what happens after 30th June 2016? Well, the June quarter income tax installment, $6,160, was paid in the month of July. So this amount is recorded on the debit side of the income tax liability account. Then, in November, a refund of $4,643 is returned from the ATO. So it is credited to the account as it reduced the tax asset that it had paid to the ATO. Now, as we can see, the 2016 financial year tax liability or tax asset is cleared with the ATO. Another especially important ATO account, the ATO Integrated Client Account, records the taxpayer's GST, PAYG withholding, and PAYG installments. Normally, we don't have one specific account for this ATO account in our balance sheet, as those liabilities or assets are recorded in GST, PAYG withholding, or income tax liability accounts respectively. But sometimes you may encounter that the business hasn't been paying the liabilities on this account for a while and all of a sudden paid quite a lot, but still leaving a random amount not paid. So now you really don't know how much should be allocated to the GST, PAYG withholding, or PAYG installments. In that case, we may sometimes decide to create an account called ATO Integrated Client Account, and instead of reflecting each tax liabilities in their own belonged accounts, we reflect them all together in the ATO Integrated Client Account. Okay, that's all for today. Hope this video is helpful to you in understanding those two most commonly seen ATO accounts. Up till this video, we've finished the part of completing year-end financial statements by pointing out the steps of accounting for some important and common accounts on the balance sheet. Normally, when we work on the year-end financial statements, we start from the accounts on the balance sheet, and then to the income and expense accounts. Because once we make sure that all the asset and liability balances are correct, we have more confidence that the income and expense accounts are recorded correctly. From the next video, we will move on to the next important part of our daily work in business services sectors of accounting firms. That is tax. See you in the next video.